guys. You can see time is around 10. As I have told, let's look into um, trade analysis on 27th and 28th of March, which I have failed to upload. And let's look deeper into these trades, analyze how the market usually behaves. So on 27th, you can see clearly the market. On 26th, the market sentiment is clearly bearish as the market is trying to head lower, guys. And on 27th, the market actually gapped down. As soon as the market gapped down, usually what I do is to plot the mid of the first candle, guys. You can see the market is trading above the mid of the first candle, and this is the 5 minute zone. So usually this both is what I usually do, plotting the 5 minute zone as well as the mid of the first candle. And this is the 200 moving average, guys, the blue color line. And another one is the weekly pivot levels, is what I usually mark. So let's plot the weekly pivot levels. You can see price taking multiple support, and this support now acted as resistance over here, and price continued towards the downside. But what actually happened is that you can see, guys, as soon as the market gapped down, the market didn't even break this low, guys. The first candle is low, but market is trading above the 50%. And if you try to plot the daily VWAP level, you can see clearly the market even broke this high and even also broke this high, guys, clearly signifying some sort of bullishness. You can see clearly the market broke this high, which resulted as a break of structure. You can consider this to be an order block level where price would have faced some sort of rejection and would have returned. And this 200 moving average also, guys, you could have easily entered short position here, keeping your stop loss in case if the market faced rejection from these levels and continued towards the downside. In case if the market would have been bearish here, guys, the market here could have clearly broke this low, even breaking the 5 minute zone as well as the mid of the first candle, or could have even closed below this swing lows, guys, here. But here you can see after this breakout structure, the market came down, faced some resistance at this 1 minute order block level here. This is the 1 minute order block, and the market came down and rejected price from this 9 as well as 21 moving average, clearly signifying some sort of bullishness, guys. You can see this kind of rejection candle showing a real bullishness. And if you try to plot this 1 minute order block over here, this is the 1 minute order block. And you can see how the market came here, rejected price from here, and even broke this structure high as well. You can see this clear break of structure. And you can consider this to be order block. You can see after this break of structure, the market again retraced to this 1 minute order block and continued further towards the upside. And if you try to plot the fib extinction levels, the low of this point to the high of this point to the low of this candle, it could have clearly targeted the 100% move or the 1.68 move. You can see here, you could have targeted all the way to this zone, guys. Here, this is the 1.68 level. Keeping your trade entry over here, keeping your stop loss just below this VWAP and targeting all the way towards this side, guys. This is the trade where you could have easily taken. And if you consider this swing momentum, the last down candle is this candle, guys. So if you consider this down candle to the common point within this, to the common point within this, you can see the market here retraced all the way to 550 levels over here. And this is where the market retraced, and the market was not able to break this high, guys, after the retracement. You could have just entered here targeting this high, but you can see throughout the day the market was moving in a sideways, as this is option sellers days, guys, and this was expiry. There was expiry in Nifty 50 as well, so monthly expiry. So you can see this kind of momentum, guys, which is not a good phase where you could have taken. But if you try to decode this trade, guys, here you can see some kind of trend line liquidity here and some kind of bullish momentum, and you could have entered short position, long position here, keeping your stop loss just below that candle itself and the 200 moving average support as well here. And you could have targeted this swing high or this fair value gap you could have targeted, guys. You can see this kind of fair value gap or this order block level also you could have targeted. You can see how the market came all the way to this order block level or somewhere between this zone is where you could have targeted, guys. You can see the market kind of reached to this order block here. But it's fine, guys. In case if you could have taken short long position here, you could have been in profit. I think you can see the market traded all the way in a sideways manner. And there is only two good trades, guys, where You can see this order block has been mitigated, so it doesn't hold any value. This you can see this was on Thursday, guys. You can see this on Thursday, option sellers day, so you can't expect good momentum as monthly expiry. You can expect this kind of premium moment itself. And let's look into 28th, guys. 28th, how the market has behaved. This is the weekly pivot levels. In 20, if you try to plot the fib levels here, the mid of the first candle, you try to low of this candle. If you draw the mid of the first candle and 5 minute zone as well. So this is the 5 minute zone. So this is the 5 minute zone, guys. This is the mid of the first candle, and this is the 5 minute zone. You can see how the market kind of showed some momentum towards the downside. Even the market clearly closed below this low. But as soon as here the market showed some kind of bullish momentum, but here it faced some sort of rejection, where even the market was not able to break this high as well. This is the first candle's high. In case if the market sentiment would have been bullish and price taking support from these levels now, guys, you could have expected that the market might even break this high and continue close above this high is what we have expected. But you can see clearly the market faced rejection here, and again the market broke here also. You can see a clear break of structure. And if you consider this swing momentum, if you consider the common point between this to the common point between this, if you consider this common point, and if you try to plot this, this is a 0.38 level, guys, which clearly signifies uh, bearishness. So you can see rejection of price from 0.38 level as well as the 21 moving average. And if you try to plot the common point between this to the common point between this to the common point between this, you could have targeted the 100%. No? And taking short position here and targeting all the way towards this zone. This is where you could have targeted, guys. And you can see this swing momentum where the market moved all the way to 100% move. And after this, you can see the market rejecting price from these lower levels and even trying to break this 20 moving average. In case, again, the market sentiment would have been bullish, bearish, the market would have faced some sort of rejection from these levels, guys. This is a 50 level, and market would have continued further and even broke this low as well. But here you can see the market here showed some kind of bullish sentiment, retraced, again broke structure towards the upside, but again retraced to this 20 moving average. But here is where the market changed its sentiment from being bearish to bullish here. So you can consider this to be another chalk formation over here, or you can consider this to be a breakout structure. Both are same only, guys. And if you consider this whole momentum as one swing, guys, the same swing, so you could have expected that the high of this candle to the low of this candle, you can consider this to be the 550 levels. So you can see price rejecting from 550 level. This is the 550 level, guys, where price is rejecting and market clearly broke structure towards the downside. But here, what you can see here is that again the market retraced towards the upside. So in case if you might have considered this momentum over here, the common point between this to the common point between this, you could have kept this as the 550 level, where the market rejected price from 550 level, and you could have easily entered short position ways, keeping your stop loss just above that candle itself and targeting all the way towards the downside. This is how usually the market behaves, but you can see the market was not able to break even this low, guys. Only after the market breaks this low is where you should enter short position, and you could consider this momentum to be very bearish. But if you try to plot the anchor wave levels here, guys, and you can see how the market would behave, or if you try to plot the anchor wave level here also. But for time being, let's consider this swing over there, guys. You can see in case if the market sentiment would have been bearish now, guys, after this rejection of price from 50 levels and a bearish engulfing pattern over here, clearly breaking the way up levels, the 9 and 21 moving average, you could have expected another bearish candle like this and some kind of bearish candles like this, clearly breaking this low and even this low. This is how usually the market behaves in case if the market sentiment would have been bearish, guys. This candles is what the market usually happen, but you can see after this momentum towards the downside, you could expect some kind of dodgy candle formation over here, And another huge bullish candle over here, guys, which broke even the 921 moving average towards the upside, clearly signifying bullishness, guys. So you could have just taken stop loss here, and you could have entered long position here, keeping your stop loss just below this candle, and you could have targeted all the way to this swing high, guys. And you can see after this swing high, the market consolidated in a sideways, and the market took support here and broke this high as well. You can see clearly the market even broke this structure high. You can consider this to be a break of structure. So you could have tried your stop loss all the way to this zone after the price broke this structure. You could have tried your stop loss here in case if the market closes below this zone, this is where you could have exited. But here you can see after this breakout structure, the market was not able to show some kind of bullish momentum. In case if the market sentiment would have been bullish, then after market breaking these levels, the market kind of retraced. And again, the market would have showed some kind of bullish momentum like this and continued further towards the upside. You couldn't, this momentum towards the downside is not what actually you could have expected. You could have tried your stop loss here after this kind of bullish momentum, and you can see price forming, rejecting from these levels and dodgy candles appearing over here is where you could have exited. Or in case if you consider this swing over here, guys. So if you consider the common point between this to the common point between this, you could have targeted all the way to 4.23 levels. And again, if you consider this momentum to this momentum, you could have targeted to another 4 point. This is where usually you could have targeted, guys, the 4.6 level. This is the 2x of the 4.26 level. This is usually how the market behaves. So you could have taken a stop loss, guys. Usually this is just a trap, guys. You can see clearly. Um, Not just showing you how the market you could have entered, even accepting yourself also is very important. So here there is one stop loss where you could have taken, guys, with a minor loss, and you could have immediately taken long position here, and you could have made a decent amount of profit with a very small stop loss. A minimum of 10 to 15 points is what you might have lost. And after this, you can see the market kind of found some sort of support here and broke the structure high, guys. And again, the market clearly broke towards the downside, clearly changing the market sentiment from being bearish to bullish. And here you can see this low formed a chalk over here. And if you consider this impulsive momentum, guys, the common point between this to the common point between this, you can see price rejecting from 0.38 levels over here. This is the 0.38 level, clearly signifying some sort of rejection from these levels. Guys, 21 moving average, the mid of the first candle, again engulfing pattern, previous and the 0.38 level. All these are confluence, guys. And if you try to plot the anchor VWAP levels here, you can see price rejecting from this level itself. Or if you try to plot these anchor levels, you can see it breaking VWAP level towards the downside. You could have easily entered short position here after this candle formation, keeping your stop loss just over that candle. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move or the 1.68 level. This is where you could have targeted, guys. You could have targeted all the way to this zone, or you could have just hold it on to your position. And you can see how the market came all the way to this zone, guys, the 4.26 level. This is where you could have easily exited this trade. This is the 4.26 level. So you can see traveling all the way towards the downside. This is where usually you could have exited your trade. And you can see this is another order block level over here, guys. So the last up candle, which actually broke structure towards the downside. Here you can see another break of structure towards the downside. And if you consider this order block level over here, this is the 1 minute order block. 1 minute order block level, guys. You can see the market came all the way, but was not able to touch the order block level. And again, with a lot of hesitation, the market came here and rejected price from here as well, clearly signifying some bearishness. And if you consider this whole momentum as one swing, guys, and if you consider the high of this candle all the way to low of this candle, you can see this is the 50 levels where price is rejecting from that levels. Or if you try to plot the anchor gap level here, after this break of this structure towards the downside is where you could have easily entered short position here somewhere, keeping your stop loss just above that candle, and you could have targeted all the way towards the downside. Or in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 2.6 level here. You can see you could have targeted all the way towards the 2.6 level, or you could have targeted midway between the 2.6, midway between the 2.6 or 3.61 level. You can see here where the market is where you could have targeted. This is where you could have targeted, or you could have exited after seeing this kind of huge bullish engulfing pattern over here, or the market crossing this 21 moving average, or if you consider this swing momentum now, guys, this is another trade where you could have taken. If you consider this swing momentum over here, so if you consider the high to low of this candle, you see price rejecting from 0.38 level over here. This is the 0.38 level over here. And if you try to plot the Fib extension levels, the count point within this to the count point within this, you can see price taking support from 0.5 as well as a 0.6 level over here. As the market has totally moved too much, guys, clearly signifying the 0.5 as well as the 0.6 level. And you can see after this, the market continued towards the upside, clearly signifying bullishness. You can see here there is some sort of bullish candles over here. And after that, this kind of retracement, guys, in case if the market sentiment here could have been bullish, guys, bearish, the market would have showed some kind of huge impulsive candles like this towards the downside with fair value gaps and imbalance is what we could have expected, like huge bearish candles like this. But what happened is that you can see this kind of momentum towards the downside, which clearly is showing some kind of balanced move, guys. This is a very balanced move. So what you could have done is that once in case if the market breaks above this level, or you can see here a formation of a bullish candle over here, you could have easily entered long position after this kind of candle formation over here and targeted all the way towards the upside. So if you consider this swing momentum here, they come on the low to high of this candle, you could have targeted all the way to 4.23 level. 4.23 level is where you could have targeted. Is where you could have targeted it. You can see this kind of balanced move towards the downside. You can see this swing structure. You can see this kind of balanced move where there is no fair value gaps. You can this kind of liquidity. Once this liquidity is being broken, or you can consider this liquidity also broken towards the upside, you could have entered long position here, breaking this moving average towards the upside. Or you can see here is where the market clearly broke structure again. And if you consider this swing momentum, guys, the common point between this to the common point between this, you can see the market here took support from 550 levels over here. Here is where the market took some sort of support. And if you try to plot the Fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, or you could consider this weekly pivot levels, VWAP level, guys, where the market rejected here, and you could have easily exited this position. And you can see this kind of rejection of price. And once if this low has been broken, you could have entered short position. So after this kind of huge bearish engulfing candle, you could have just entered short, keeping your stop loss just that position, and you could have just hold it on to your position. You can expect further momentum towards the downside, guys. But look at this, guys, how many trade setups which I have told you. One SL where you could have easily taken one, two, three, four, five, and adding to your position here is another six trades, guys, where you could have easily taken. I hope you're getting what I'm saying, guys. This is 1 minute order block where the market rejected price and came all the way towards the downside. And the price action here is completed, guys. One order block level, market retraced, took support, completed the 4.26 level. And after this, the market has to target all those sellers. So the market has to move towards the upside, guys. And you should always find potential where you could see some kind of support zones. And you can see the 0.5 as well as 0.6 level zone where the market took support over here. And you can see this kind of huge bullish engulfing candles, guys, clearly showing some sort of demand over here. But a lot of buyers who might have entered here with this kind of balanced move, the market also took out all those buyers. And with a very slow phase, the market moved towards the upside. And you can see how the market all the way moved towards the upside after breaking this 21 moving average. You could have easily entered here, guys, after this trend line liquidity is being broken. And you could have targeted all the way towards this 4.26 level. Towards the downside, it was 4.26 level, and towards the upside, it is twice as that of the mm, towards the upside, guys. And that's it, guys. That's how you could have easily targeted. Here also, it's the 4.26 level where you could have targeted. Hmm. I mean, this is about Nifty 50, guys. I hope you're understanding. In case if you find my videos a little bit helpful, guys, please like, share, and comment. This is how usually I trade, and I have told you everything in detail of how I usually take my positions and how I do manage my risk. And hope if you are really liking my content, share with your friends and family, and especially share with your trading friends, guys. Hope they also will be beneficial. Uh, and please be learning, and definitely one day you're gonna be better trader, guys. Thank you.